Hello. Thank you so much for stopping in. Welcome to Winning with Winton, Homebuyer Education. I'm Chimerew Winton, and you are now attending the home buying process and what to expect. This is part two of a three-part homebuyer education series. And hopefully you've already attended part one and you will sign up for part three. And if not, then hey, you know, I hope we see you soon. So just a little bit about me before we jump in. I'm Shamira Winton again. I am a realtor, a Texas affordable housing specialist, a pricing strategy advisor, and a certified probate real estate specialist. Originally from Michigan, graduate of Tuskegee University in Alabama. My background is in management, customer service, and training. I am the mom to one fur baby. His name is Baxter. He may decide to join us at some point this evening, so don't be alarmed if he pops his little head up. I currently reside in DeSoto, and I've been licensed as a real estate agent since 2018 after I purchased my first home through the NACA program, which we'll talk about a little bit. And my ultimate goal here is to help as many people become educated home buyers as I possibly can. That is ultimately the goal. Oops, went a little fast there. I want to talk about what we're going to go over today. We're going to talk about your partners in the process and some real estate terms that you'll hear. We'll discuss pre-approval, programs, housing counseling, and other resources. Excuse me, we'll talk about what real estate agents actually do. We'll go over the home search itself, making offers and offer acceptance, inspection, appraisal, and homeowners insurance, underwriting, approval, and closing. Now, one thing to know, this seems like a whole lot of information, but keep in mind that there's not an expectation that you remember all these things. It's just to give you an idea of what you're going to learn about. You're not going to remember everything, but when you hear these things come up again, you'll say, oh, I remember I took that class and she talked a little bit about that. And then, that kind of helps you along the way. So don't be overwhelmed with information. Just know that you're going to hear it again. And when you do, it'll be familiar to you. So again, starting with the partners in the process, starting with your realtor. Now, your realtor is the person that's helping you find your home, but that's going to be your person, throughout the whole process. They're going to be involved with the other partners in the process to help you get to the end goal, which is the closing table. The next person that you'll be involved with the most will probably be the lender, because they're the person that's going to help you with the financing, setting up your mortgage and escrow, and all that good stuff. You're going to deal with an inspector, and the inspector is going to help you determine if there's any major issues with the house. They're going to make any professional referrals as needed. If something does come up, they may say, hey, you may want to have a roofer, plumber, what have you, look into this further. The appraiser, you're not actually going to meet or deal with, but they are the ones that are going to determine the actual value of the home. So you will have some information from an appraiser. You're also going to work with the title company, which is going to ensure that there's no issues with the title of the home and also provide you with title insurance. So, there's many people that you're going to be in contact with through this process so that you know who you're dealing with. All righty, and next up we have some terms and definitions. Again, a lot of information, but I don't expect you to remember it. Just, that it's something that you've heard of before when you do get to the actual home buying process. Starting with earnest money. Earnest money is an amount of money that helps the seller know that you're serious about the purchase of that home. An option fee is a non-refundable fee that secures the option period. What's the option period, you ask? I'm glad you did. It gives you the right to terminate the contract for any reason or no reason at all, and the time frame of that option period is negotiable. Title is going to show you the legal rights of ownership of the property. Title insurance protects the chain of ownership in the property, and ensures it from any errors that have previously occurred. The survey of the property is a graphic that shows you the property lines and boundaries. Then we have a seller's disclosure. Excuse me, each seller should pretty much provide this, for the sale of the property. It's an affidavit that the sellers will disclose any conditions about the property to the best of their knowledge. You're going to hear the term clear to close. That basically means that all conditions have been met to close and officially make that property yours. Closing and funding, those are two words that we love to hear together. And that basically means that the property changes ownership and all parties have been paid. Default, not a great word. Hopefully you don't have to hear it. But basically that just means that when either party fails to comply with the contract in any way, and of course, your real estate agent will be there to help you avoid that situation at all costs. Closing disclosure is going to provide the final details about the loan itself that you've been approved for. Escrow is usually a lender controlled fund that's going to pay the accrual of insurance and taxes. And equity, that's something we all like and want to have. It's the difference between what the homeowner owes and what the home is worth. So a lot of terms and definitions there. Again, you don't have to remember them, we just want them to be familiar to you once you get to the process. Now, we're going to jump into talking about the financial portion of the home buying process. And we have our partner lender here. His name is Michael DeBacker. We affectionately call him Mortgage Mike. And he's going to talk to you guys about what he does and can offer you. And I have his information here. If anything comes up after this presentation is over and you have questions, and I'll have Mike take it away.
Thanks for having me on. I do appreciate it. And, one of the biggest things is, you talk about all this information and don't worry, you don't have to remember it all. And that very much is the case, but it's still important to kind of hear just a general overview of what to expect when you do begin the process. And beginning the process, that's the most important part. I mean, it sounds obvious, it sounds kind of silly, but so many people, they start to say, wow, this might be too much. I don't know if I can handle this. So I don't even want to talk to a real estate agent. I don't want to talk to a lender because how am I supposed to do all of this? And the reality is this process is not that hard. Doesn't mean it's not nerve-wracking at times. Everybody's going to be nervous. I've purchased 2 homes now, and as long as I've been in lending, I was still nervous in the transaction despite knowing exactly what was going on. So there will be some nerves. That doesn't change. But just starting the conversation with one of the professionals, whether again that's a real estate agent or myself on the lending side, is the first step. And once you get there, I promise you'll start to feel a little bit better. And now we can start moving that ball down the hill. So what does it look like when you start working with myself and my team? Well, first, we want to have just kind of a general overview conversation. So I want to understand more about your timelines. So when are you looking at making a move, buying a home? Do you need to sell a home? Are you renting? We learn more about that situation. We learn a little bit of an overview of your income, your assets. We'll talk generically about credit. Of course, I'll answer any questions, address any concerns you have. We can talk about different programs. But the initial intro call can be 5 minutes. It could be 20 to 30 minutes. It's really just depends on how much you're curious about, what information you're seeking in that intro. And then, of course, if I don't have a spider web that I have to kind of climb through with you guys, then it'll be on the shorter end. But it's okay if it isn't. But either way, the first step is just a generic intro call, excuse me, so we can learn more about what you're looking to accomplish. From there, assuming the timing is right, meaning, we might be looking at 30, 60, 90 days to purchase a home, excuse me, then we will actually move you forward to a pre-qualification. And all of that is we can either do it over the phone or I can send you a link and you can hop online. And basically that conversation we just had, you're going to do that again, but in more detail. So let's say you go online and you do the app there. You're going to let us know where you work, how long you've been there, what your position is, what you're paid. Same with your assets, how much you have in checking, savings, 401ks, IRAs, whatever it is you have. And then you'll give us authorization to pull a credit report, which is now where, of course, A, we're going to see your credit scores, B, credit history, and C, we'll see the debts that you have on there. So we can grab your balances and monthly payments on your active debts. And that is how we can pre-qualify you. We usually follow back up within 24 hours from receiving the application. And when we call you back, we're now going to already have a strategy in place for you. We'll start talking about which program or programs make the most sense for you. We'll talk through estimated monthly payments for certain price points that you're interested in. We'll talk about how much you would need to bring to the closing table for down payment, closing costs, etc. So it's going to answer so many questions that maybe you don't even know you have yet. And that's why I kind of say starting the first conversation will be so beneficial to you, because you don't have to know all the right questions. You don't have to know all the information up front. We really want to kind of segment everything into smaller sections. We want to start with an intro. Then we move to the pre-qualification. Right there, once we have you pre-qualified, now the fun starts. That's when now we get you back with Shamir and you guys can begin looking for a home. As you're looking at homes, let's say you see a few of them you like, but you're not sure if they're going to fit in your budget. No problem. You're just going to shoot me the address. We can run kind of an estimated payment more specific to that property to make sure it does fit. And then, of course, if you like it, then you guys can come up with what an offer would be for that property. You'll put an offer to the seller. Assuming that offer does get accepted, that's when now we are actually going even deeper into the numbers. We're really getting into now which interest rates make the most sense. Now that might be a weird comment for some of you to hear when you hear interest rates, plural. One of the common misconceptions about mortgage lending is that we have one single interest rate that we can offer you. But the reality is you can get almost any interest rate that you want. We just have to look at what is the cost of that money. So I'll give you an example of what I mean. Let's say today, I'm just using a random number. It's not based on anything. And depending on when you watch this video, the market could be completely different. But let's say the market interest rate for your scenario was a 6.5. Well, what you can do is you can buy down that interest rate. You can pay a little bit more money at closing to buy what we call discount points to get maybe a 6.25 or a 6% or a 5.875. Or you can do the inverse. You can go higher than a 6.5%. Let's say you want to go to 6.75%. Well, instead of paying more money, you actually receive credits to go towards your closing cost. So it's putting the cart before the horse a little bit, but the point being is once you do have a home under contract, now we can lock in an interest rate. So I'm going to build out a scenario or a presentation for you guys, and we'll put 3 or 4 different scenarios side by side, and we'll go over this presentation together to determine which one we should be locking into. So once we lock in that interest rate, now we are trying to get your file moving forward into processing and underwriting. So what processing is basically now we are asking for all your pay stubs, your bank statements, W-2s, whatever it is we need based on your file. My processor is going to help collect that, and they're kind of building up the rest of your file so they can submit that into underwriting. Now we'll get into underwriting in just a second, but at this same time, we are now also going to order the appraisal. The appraisal is, of course, going to determine what the value of the home is that you're purchasing. We hope that it at least does come in to match the contract value, or if it needs to come in lower, that it does. We really want it to come in at the right value. Honestly, that's the point. We want it to come in at the right value. But if it does come in lower, then we need to have some conversations and have a conversation with the seller as well. But it will also let us know if any repairs need to be done to the property for the home to be what we call insurable, which is very important on mortgage lending. If a home has a lot of tough conditions, we can't close on it until those conditions have been repaired. So if there's a hole in the roof, just for instance, that would have to be repaired before closing. We cannot close without it. So the appraisal will help us with that and help determine the value and make sure that this is a good investment for you and for us, the lender. So we talk about, again, processing and underwriting. Once we move your file into underwriting, usually within 2 to 3 business days, an underwriter is going to review your file and review all of your documents. At that point, they're going to come back and they're going to say, okay, your file is conditionally approved, which means they like it, everything looks good, but you have conditions you have to satisfy. And this happens on every single loan, completely normal, completely common. I'll give you an example. You have to get insurance on every single home that you're financing. So let's just say early in the process, you haven't yet contacted an insurance agent. Well, the underwriter's going to say, hey, we need to know who they're using for insurance and how much the policy is. So that will be a condition for you to satisfy. That'll be a homework assignment. Maybe you have a random large deposit on your bank statement. Let's say your brother or sister paid you back $5,000. Well, we just need to figure out where that came from and maybe do a paper trail, depending on, again, the size of your income, the size of the assets, again, putting the cart before the horse a little bit. But point is, we will come back to you with anything else the underwriter needs. We'll work with you. My process will reach out and say, I need X, Y, Z. You'll obviously work to get those items back into us. And then we get you in for one additional round of underwriting where they'll review those documents. So assuming everything looks good, they will then put their final stamp of the approval on the loan, which is great, because then that means we've done all the heavy lifting and you guys, I wouldn't say pop a bottle of champagne just yet, but you're getting very close, because what's next is now we will work with the title company to come up with the final numbers for you guys, present those to you. Really, there should be minor adjustments, but at the end of the day, now we just get you to the closing table, and the closing date is based on the negotiated closing timeframe on the purchase contract that you and the seller agree upon, and that's where you'll sign documents. Signing process could take 45 minutes roughly, and then your loan will fund the same day, which means all of the money has changed hands, it's gone to the correct places, and now you have become a homeowner. One of the cool things about buying a home that a lot of people don't realize is you don't immediately have a payment due at the start of the next month. So we are recording this here in the middle of January. If you were closing on a home tomorrow, for instance, your first payment is not February 1st, it is March 1st. So it's always the start of the second month after you close. So you do get a little bit of a housing payment reprieve, potentially. Some people still have leases and whatnot that were maybe they have to make one extra payment, but you don't immediately have to start paying back that loan. So kind of a nice benefit. But Jameer, anything else on that process that I can cover for you?
No, that was great. You actually touched on a couple of my next slides, so that works perfectly. So I appreciate that information. And I'll let you know if any other questions come up. And speaking of a lot of what Mortgage Mike was talking about, these are some things that they look for: the credit score, history, assets, available cash. I won't go into too much detail because Mike pretty much nailed it. But I do want to mention, which you are likely going to hear myself and the lender say a lot, is don't go buying anything with your credit. When you're ready to buy a house, that's the only credit that counts. Everything else
Even the
can,
day you close, please wait till the day after you close.
yeah. So that is one thing that I do want you to remember from this entire presentation. Don't get any new credit once you begin the home buying process at all. So that's great. Now I am going to jump into a couple of programs. There are tons out there. Some I probably don't even know about, but I'm just touching on some so that you guys know that they are out there. So a few that I have here, we have Seth, we have TSHAC, we have the Texas Department of Housing and Community Affairs. These are some that I know lenders to work with for the most part. There's also the Mortgage Credit Certificate, or MCC for short, which helps you get 20% of what you spend in your mortgage interest back as a tax credit. That I believe applies to any first-time home buyer. Is that accurate, Mike?
Yes. Yep.
That's what I thought. So, so that, and I do believe it actually, you can use that with other programs too, right?
Yep.
Awesome. So great benefit there. I did not know about that when I bought my house, so I missed out. So please, I don't want anybody else to miss out on that. So know about that. Now, we love our lenders. I especially love our mortgage mic partner. But sometimes certain situations may come up where you may have to use a different program. Um, there's plenty of them out there. Bank of America has one. FHL Bank. There's, like I said, tons out there. I don't even know all of what they are. One in particular I can speak to is NACA. As I said at the beginning, that's how I purchased my home. I won't go into too much detail about it. We can always talk about that offline. Reach out to me. I'll tell you anything you want to know. But these are um, program specific. You have to pretty much go through them directly to take advantage of them. Just so you know that they are out there. And then there's also city and county specific programs that exist. So if you live in the city of Grand Prairie, for instance, they have a housing assistance program, down payment assistance, and so on and so forth. Again, not all the cities are listed here. These are just some that I picked up on and are familiar with. Um, then we have some other programs out there. Some people may choose the rent to own route, which is not an official thing we can do in Texas, but these programs have found out a way to help you with that. So you can rent the home from them, turn around and buy it from them. And then there are also cash buyer programs out there. Again, there are programs on programs on programs. Just have to sit and figure out which one is going to work best for you. But know this too, that when you do choose a program, there's no perfect one, I guess we could say. So again, you have to find what works best for you. You may have one that zero down payment, but the higher interest rate is higher. Some programs may require that you have so much saved. There, like I said, there's a variety of things to think about with the different programs, but sitting down and figuring out which one's going to work best for you, especially if you can't go the traditional lending route, is what you want to do. Now that we've kind of touched on programs, kind of want to talk about what a real estate agent actually does, because as a first-time homeowner, you may not know. So one of the big things we do is we're gonna get all in your business. So, and trust me, it's not for the sake of just getting in your business. We really want to know you and know about you so that we can help you. We want to learn what your needs are, learn what your family needs, so we can find the homes that fit your criteria. And based on our experience and knowledge, we may advise and suggest based on your stated needs. But we're never just going to say, oh, you should do this, you should do that. It's going to be more of a, hey, you mentioned, XYZ. Well, this may work good for that. And it's up to you if you want to take that suggestion or not. We also negotiate and advocate on your behalf. There's a lot of things that go on behind the scenes that you as the buyer may never know about. We really do, speak with, the other partners that are part of the process. We speak with the other agent on the seller side to, come to a consensus on what we're going to do to get you guys to the closing table and become homeowners. So we are negotiating and advocating on your behalf. And we also provide resources, information, and referrals as needed. I always tell my customers, once we close, our relationship isn't over. You may need a plumber. You may need a roofer. Give me a call. If I don't have one, I'm going to reach out to my network and say, hey guys, I have a client over here who needs a plumber. Anybody have any suggestions? We do that all the time. There's all kind of messages that go back and forth because we are really trying to help our clients even after you become homeowners. So keep that in mind. Now, with the things that we do, there are unfortunately some things that we cannot do. Oops, it jumped ahead of me. So please be aware of that too, because sometimes people think that agents are being difficult or gatekeeping is the big word that I hear a lot now, and that's really not the case. we are bound by a code of ethics, and we have to adhere to that. So we cannot tell you which house to get. Oh, you should get this house or you shouldn't get this house. We cannot do that. It has to be your decision. We can only advise and suggest, and it's up to you if you decide to, you know, listen to the advice or suggestions, but we cannot tell you what to do. um, and there's a term known as steering that we mostly hear about in our network, but it is illegal and goes against our code of ethics. And it makes it so that we are not supposed to discuss the neighborhood economic status, the local school systems, race, religion, or color in the area, or even the crime rate. So when we're asked about these questions, you may see us get a little, try to avoid giving a direct answers because we're really not supposed to talk about those things. However, we are able to provide you with resources where you can find that information for yourself. Because again, it has to be your decision. We cannot, quote unquote, steer you to or from any of those demographics. So it has to be your decision. We also cannot interpret the contract, only a lawyer can. So we are not lawyers, we cannot practice law. So if it gets to a part of the contract that goes beyond our scope as real estate agents, we may refer you to a lawyer. That doesn't happen very often, but just know, if we say, oh, you might have to talk to a lawyer about that. It's not because we don't want to talk about the contract, is we don't want to, we are not lawyers, we cannot practice law. So if it goes beyond our scope, we have to refer you in that direction. And so again, just putting that out there so that you are aware. How real estate agents get paid. Just so you know, the average agent makes 3% commission of the sale price of a home, which is always, always, always negotiable. But a lot of people don't know that. They don't know how much we get paid, when we get paid, etc. A lot of times, buyers agents and sellers agents commission is typically paid by the seller. However, in the event the seller does not pay or does not pay in full, the buyer would pay the buyer's agent's commission. Again, everything's negotiable, and we'll delve into some negotiation in the next couple of slides. We don't get paid until your house is purchased, until closing and funding. Once you get your keys in hand, we don't get paid until then. So just so you're aware of that. And another thing too to keep in mind is that we are, again, our full commission base. So we take our time with you. We make sure we understand your needs and help you accordingly. So if you decide that agent isn't working out for you, they get no payment for their services. So just as an FYI, they're not getting an hourly paycheck for helping you out. Just a tip. Now, again, my disclaimer, don't get overwhelmed with this information, just so that you are aware of what's expected or what can happen. Home buying expenses. Now, what you see here is not always what it's going to look like. I'm just putting it out there because, just so you know. So again, the term that we talked about early on, earnest money, that is typically 1% of the sale price. It's negotiable though, so it's not always. It could be less, could be more. The option fee, again, is negotiable. It could be any amount. I've seen lower than 75. I've seen higher than 250, but usually around 75 to 50 is what I've seen. The inspection, you're going to find your inspector. You can shop around for an inspector. The prices are going to vary, and also the services that they may offer can vary. So keep that in mind. It can range anywhere from $350 to $650. But again, you can shop around for, and your agent or lender may even be able to suggest some inspectors if you need help with that. Excuse me. The appraisal, that can vary, and I'm gonna jump in and ask Mortgage Mike on the appraisal because I'm a little out of that loop. But anywhere from like $450 to $650 do you think that's fair on what the appraisal could cost?
Yeah, we usually estimate 680 up front. Sometimes it can be a little bit less, sometimes it can be a little bit more. I'll stretch an example here. If you're buying a, 4,000 square foot mansion, in Dallas, certainly that's going to be a much more expensive appraisal. Or if you're out in, West Texas on 100 acres, much more expensive appraisal. But that's rare. Most of the time, we estimate 680.
Okay, 680. Okay, so an adjustment there. I'm a little out of that loop because I don't particularly handle the cost of the appraisal.
And
So
and they did used to cost about that range. Of course, it's just, inflation. Things get more expensive.
good old inflation. So
Yep.
yes, in my next example, the number I use probably isn't going to be that, but thanks for that information. Um, and depending on the loan type and a number of different factors, your down payment could be anywhere between 3%, 20%, even higher in some situations. So just depends. Home warranty, something you can shop around for. Again, I may be out of the loop on that price too, but roughly 500 give or take. Shop around, see what's out there, what may work for you, or if it will work for you at all. Homeowners insurance, yeah, that's going to vary. It's going to depend on size of the house, all kinds of different factors. I have an insurance agent speaking next week for part three. If you want to sign up for that, who can give more detailed information on the homeowners insurance piece. However, roughly 15 to 3,500 a year, maybe more depending on inflation and other things, unique to the house that you're shopping for. Title policy, 1% of the sale price or less. Closing costs typically around 2.5. It varies. And it's also negotiable. We, as agents, try to negotiate with the seller to see what they're going to contribute to kind of help you with that. And the agent commission, again, negotiable, but it's typically around 3%. And something else we also try to get help from the seller's agent on. Now, here is an example, good old disclaimer. This is one scenario of probably a million that it could look like. And so, oh gosh, why does this thing keep jumping ahead? Okay, let me go back to the original example. This is like just straightforward, you're covering everything example. And we're using a $300,000 house as an example. That's how much you offer, that's how much was accepted, and that's how much the home appraised for, which we're going to touch on in a little bit on appraisals. So earnest money decided to go with 3,000. That was accepted. The option fee of 100 was acceptable to the seller. You found an inspector who's going to inspect for 450. Appraisal, well, before inflation, it was 550. Down payment, 10,500. Closing costs, 7,500. Home warranty, 500. Homeowners insurance came out to 210, and the title policy 3,000. Agent commission 9,000. Now, again, that's if you were responsible for paying all the home buying expenses. Now, with your awesome realtor negotiating and advocating on your behalf, and your awesome lender bringing in some programs to help you with some other financing, we're gonna look at it a different way. Now, the first four fees, still for the most part are gonna be there. However, the lender was able to get you a down payment assistance, so you don't have to pay anything. And not only did you maybe in this scenario had some money left over for closing costs, but the seller also contributed towards closing costs. So your cost is only 3,500. The seller even was willing to pay for a year worth of a home warranty for you, so you don't have to worry about that. You still have your homeowner's insurance though, and title policy. Seller said we're going to take that off your hands as well, and your agent commission. Seller decided, and their agent decided they're going to help you with that as well, so you don't have that cost either. So all the things that we were able to negotiate, we negotiated on, and we got your home buying expenses from the 3,800 that it was, I believe, to 7,810. Again, just an example of a million different ways it could go. But just so you can kind of see how programs and negotiations and all those things can help you with your home buying expenses. Jumping over to, did it skip me? Nope. Okay. Thought it skipped another one. The home search itself. So, you got your pre-qualification, you know how much you need to take to closing and all those good things. You're looking for your home, you're gonna want to know what it is you want. And that can sometimes be easier said than done. Sometimes you don't really know what you want until you start looking. But if you have a general idea, like number of bedrooms, number of bathrooms, that's a good starting place. Um, a lot of my clients don't typically know, oh, I want this much square footage, but you may want something small and cozy, or you may just want something large and open. That helps for your real estate agent to know. Do you want a small yard, a big yard? You don't care if you have a yard or not. Do you want a fenced-in yard? You could care less about a fence, or maybe you just want the ability to add a fence later if you want. You want a garage? Do you want your garage in the front or the back? Things to think about. Where do you want to live? Do you want to be near things you like to do? Do you want to be secluded and away from everything? Do you want to be near work? Do you want to be near your family? Things to think about. Do you want a pre-owned home, or do you want a new construction home, or are you open to looking at both? These are things that you want to just think a little bit about. And again, sometimes you may not know until you get out there and start looking, and that's okay. One big piece of advice that I give all my clients is that there is a difference between settling and compromise. So you're going to want to know your must-haves versus your nice-to-haves, and be realistic. I always use my own example. When I was looking for a home, I had to have a garage. There was no ifs, ands, or buts about it. I did not want to look at a house if it did not have a garage. Didn't care if it was a front garage or a back garage. I just had to have one. However, I also really wanted a walk-in shower instead of a tub, but I did not have to have that. It was like, oh, if it has that, that would be great. But it wasn't, a must. So it was more of a compromise. And my house had a garage, but it didn't have a walk-in shower, and I'm still okay with that to this day. I know that my next house could have one, or if I decide to renovate my bathroom, I could just add a walk-in shower. No big deal. So keep that in mind when you are considering your home search, that there is a difference between settling and compromise. And that boils down to your must-haves versus your nice-to-haves. Then we have making offers. This is, again, one of those things that will come up later, so you don't have to remember. But again, your agent is here to guide you, not make the decision for you. So as your agent is guiding you, remember, that you're making the decision about how much you're going to offer, how much your earnest money and option fee is going to be, what type of financing you'll be using. You and your lender or other program person would help you with that. Who's going to pay for the closing costs and title fees? We kind of help negotiate those things, but up front, you could say, well, hey, I want them to pay half of it, or I want them to pay all of it. That's your decision, and that's what we will present to the seller. What your close date is going to be, that can kind of be up to you, but ultimately, your lender's going to kind of help you say, hey, this is when we can get you all approved and all that good stuff through underwriting. This is when you can close, but you may say for whatever reason, oh, I need to add another 5 days to that. You kind of have a little bit of a say in that. And that's what you let your agent know, and that's what your agent's going to present to the seller. Home inspection, once the offer is accepted, it's not required that you do this right after the offer is accepted. However, this is pretty much what all agents that I know recommend that you do take, recommend that it happens is during the option period. And that's because the option period is that protection period that lets you back out. And sometimes people do decide once they get their inspection back that they do want to back out. It does happen. But just know if for whatever reason you don't want to get your inspection until the week of closing, which I wouldn't recommend. Just know that it's an option. Um, if something does come up on the inspection report, you have options. You can negotiate with the seller to make some or all repairs. You can choose to make the repairs yourself, depending on what they are, as long as it's nothing that could hinder your loan approval. Or you could decide that there's just entirely too much wrong with this house. I don't want anything to do with any of this. And it happens sometimes that people get that report and they're like, ooh, that's way too much. I just don't even want to bother. And you can just back out because you are in that option period. So that's the home inspection in a nutshell. Now let's talk about appraisal. So Mortgage Mike kind of touched on that a little bit. Just using an example, that same $300,000 house that we talked about, you offered, got accepted, went through the inspection and all that good stuff. You move forward to appraisal. There's a few different ways it could go. That home could appraise and value for less than what you offered. If that does happen, some additional conditions may or may not need to be met. So that may mean they come back and ask you for the difference. They may come back and ask you for a little bit more to help cover some of what the money that they're not going to get. Or they may just say, okay, whatever, let's move forward. It could go a number of different ways. If it appraises right at what you offered at the $300,000, you're pretty much good to go from there. You break even, you move forward towards closing. If it overappraises, well, then that's just good news for you. You have some equity movement from the start. So that's what we would all love to happen. So that's appraisal in a nutshell. Again, it's the value of the house, which could be a little different from what you offered. Homeowners insurance, again, I'm not an insurance agent, but I do have one speaking next week. So this is just a overview. You kind of want to look at your homeowner's insurance that you're shopping for as far as what it's going to cover, what it does not cover, and what types of policies you have the ability to add on, such as do you want to add on flood, windstorm, hail, home-based business, inflation guard. There's so many different policy add-ons by so many different insurance agents. That's why you talk to them. They are the professionals there. And they can help guide you with that. But don't go in getting homeowners insurance not knowing what's covered. It happens a lot, especially in Texas with the unpredictable weather we can have, where they think, oh, this is covered. I'll get the insurance, to take care of it, and it's not. So you'll just want to be aware and know what it is you're getting into with your insurance. I'm not going to go too much into this because Mortgage Mike kind of touched on underwriting and mortgage approval. That we're kind of at that part of the process, once the appraisals come in and you shopped for your insurance. And at this point, hopefully all conditions have been met and you are cleared to close, because then you get to close. The closing table is when all the papers are signed, all the funds are distributed, you get the keys to your house, and you are now a homeowner. And that's what we have all worked so hard for. So that is pretty much, the steps of the home buying process. Some frequently asked questions that we can get, which are kind of loaded, but I get, how long does it take to get through the home buying process? That's going to vary on a number of different factors. It could be the market itself. It could be your personal situation, whereas you have those conditions you need to meet. It could just be that you're not finding what you want. The home buying process can vary, but if everything's just perfect and dandy and you find the first house, put the offer in, it gets accepted, everything goes perfect through underwriting, maybe 30 days. So that's probably maybe the quickest. Again, as far as how far out it could go, I'll be honest, it took me 2 years for me, because I had to get a new car. I didn't have a choice. There was no way around it. I needed a new car. That set me back because I had to do that with my credit. And again, like we always say, and you're going to hear this over and over again, no new credit. I had no choice. I had to get new credit. I had to wait. It is what it is, but I eventually got my house. So, um, do I need a home warranty even if I get homeowners insurance? We tend to recommend that you do get a home warranty because the homeowners insurance pretty much protects like the structure of the house. The home warranty protects what's in the house, like the appliances, the washer, dryer, etc. So we recommend it, but not everybody gets a home warranty. I have help buyers who decided, I'm not going to get a home warranty. That's your choice. But we always recommend it so you don't have that extra headache of trying to figure out how to get a new appliance or how to get it fixed. You just get the home warranty to help you with that. What home buying program is best? Again, each program has its benefits and drawbacks, so you have to decide what's going to work best for you. I can always help you go through them and see what may work for you, but I can't really say, oh, this is the best program right here. I don't know, because for you some other program may be better for you. So and what happens if I don't find the house I want? Well, that will be a personal decision. We as agents are always going to try to find ways to help you, even down to getting a custom home built. If you're just not finding what you're looking for, none of these houses meet my criteria, it has to have X, Y, and Z, and it only has A, B, and C. We may look at custom houses, or we may, you may decide, well, I'm just going to wait. Either my expectations need to change, or I just need to wait for the perfect dream house to pop up. And that's okay. But, again, we're always going to be here to help guide you, to help you find that diamond in the rough. But at the end of the day, it's up to you, if you're just not finding what you're looking for, what you want to do from there. And that is the end of that. Well, since we're doing this for YouTube purposes, there's no one really here to ask questions, but drop any questions you may have in the comments. If if it's something that I don't know the answer to, I'll reach out to my friend Mortgage Mike and see if he can answer them, and I'll respond. So yeah, just put those questions in there. That's what we're here for. We're here to help educate you, help you become educated home buyers. So that is what we want to help you with. Now, you've already gotten Mortgage Mike's information. Here is my contact information. Again, if we were live and had an audience, I would ask you to take a survey. But again, you can just put your feedback in the comments. If you thought it was great, if you want to learn more information in the next course, drop it in the comments. I do like to get feedback because, again, I'm here for you. I'm here to help you. And however I can do that, then I will do it. And so that's pretty much it. Anything else you want to add, Mortgage Mike?
Just thank you guys for tuning in. Again, if you do have any questions, please let us know. Always happy to help.
All right. Well, thank you guys so much for stopping in and hearing us out. And hopefully we can help you get into that home sooner rather than later. Bye-bye.